institutional run in the banks, in terms of money fleeing, it's also institutional lack of response in Europe. They're literally fiddling as Rome was burning. I mean, it's outrageous. 2 years after Greece became a problem, they're still saying we could just give Greece a little bit more money and everything's going to be fine.
It's unbelievable. We went through this in 2008. You can say then, okay, maybe people were caught by surprise.
Right.
Europe, and you just couldn't have less of a surprise. Anybody who has been watching this situation since then has been saying, okay, next is the sovereign debt crisis. Europe is very exposed. The banks are very exposed. Right. It's all about the banks. Here we are. Train is getting closer and closer to the cliff, and nobody's doing anything. And granted, hard to do things.
Yep.
What should you do? The banks that are in trouble, exposed, you seize them, you write down the assets, and then you recapitalize them. It is not complicated.
Right. Or an alternative, which is what Tim Geithner, I think, wanted the Europeans to do when he was there last week, is to come up with a Tarp for Europe. And to just,
all that is don't seize them.
Right.
Recapitalize them.
Force them
to write down the debts, which we never did in the United States, and we're still paying the price.
I agree with you. I'm just, the other alternative is that you recapitalize them, and then you let Greece default, and they can withstand the shock of that. And I think but they're not doing either of those things, and that's the problem. The other issue is manufacturing data in the Eurozone. The PMI is below 50, which means contraction for the first time in 2 years. Also weaker than expected purchasing managers index out of China this morning. So there's a banking crisis, there's an economic crisis, there's a lack of political will crisis. It's a crisis.
And to top it all off, we have the reemergence of Professor Nouriel Roubini, who is now at the top of his lungs this morning saying it's going to be another Great Depression, and there's nothing the Fed can do about it.
Yes, and to your point, the Fed, I think, did a lot yesterday. I mean, $400 million of Operation Twist. They also said they're going to start buying mortgage-backed securities again, which is, they stopped doing that. That's a new thing. I don't think people are expecting that. But to your point, I don't know what traders were hoping the Fed was going to do. And if they had done $1 trillion of QE3 or whatever you want to call it, people said, oh, the Fed's just printing money. The issue this morning, the dollar is rallying because the Fed didn't do an outrageous amount. And for all those people who the last couple years were saying, oh, the dollar's falling, this is what happens when the dollar rallies, at least in the financial market. Stock markets tumble, gold is tumbling, all the risk assets are tumbling.
That's right. The Fed, every time they do this, pull down interest rates, it has less and less impact.
Yep.
The more time goes by, remember a couple of years ago, there were the camp that were saying, oh, it's just a cyclical recession. Just fuel it a little bit, we'll be off to the races again. A lot of other people saying, ho, 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 we built up a mountain of debt. We are Japan. We've got to work off that debt. Every day that goes by, it becomes clear that the folks who are saying mountain of debt, we're right. This is a deleveraging balance sheet problem. Lowering interest rates have been zero in Japan for 2 decades.
And they're heading that way here in the States. But I would rather be Japan than Europe right now because Europe, it's a disaster.